Hey everybody. Well, it's one of those weekends. My zeal for talking about shorts is back with a vengeance, and I wanted to walk you through my bear pin, which is the watch list I have with all my both real and prospective short positions. And just for your sanity, I've broken this up into manageable bites of a dozen stocks each. And as I usually do these things, I'll just start off with something very general, then I'll dive into the actual 12. And the most basic thing in the world is the Spider. This is the oldest, by far the biggest, most heavily traded ETF. And the story is pretty straightforward. We began what I believe is this massive topping pattern way back in June of last year. And we completed and this is not a good head and shoulders pattern. In fact, it's not even a head and shoulders pattern, but I'll describe it in those terms for lack of anything better at the moment. So the left shoulder, if you will, was formed here during these months. Then we began this ascent in October, November, December, and of course, New Year's always brings psychologically the sense of like, oh, everything's gonna be great now. So there's always this new optimism when a year breaks, and that peaked right 2 days into the trading year on the 4th, and that was actually the lifetime high in the market across the board, January 4, and that was the top of the head, if you will. And then we began this marvelous plunge, which was all inflation based. It was all about worried about inflation, worried about rising interest rates. And this bottomed here on the 24th of January. And then we began sort of the right shoulder. And it's the right shoulder that screws things up because this is way too high for a right shoulder. But that's what's been going on here because we did this, which for our purposes bottomed on March 14, and then this revolting, disgusting, vomit-inducing rally from the 14th to the 29th commenced, which only began to abate on Wednesday, Thursday, and Friday, like so. So it's a messy top, but I consider it a top nonetheless, and we're still range-bound at this moment. This is this big range we're working with. And even if we do break, I think we will, but even breaking this level again does not get us out of the woods because as we've seen, there's been 1, 2, 3, 4, 5, 6, 7 different days where we've pierced this important Fibonacci retracement and it didn't amount to a hill of beans, except it provided support. But that's crudely what's going on. And by the way, one of the reasons I focus on individual stuff because things like this are just such a fat mess to deal with. So let's start with this first 12. Advanced Auto Parts, AAP, and I'll try to remember to mention the items that I actually am in position on because, kind of ipso facto, it means that they're my favorites. This is not one of them, but all of these are, I think, interesting short ideas. So Advanced Auto Parts, AAP, there's a little top on that one. And I'll turn this little update line off because it's the weekend, I don't need that. Ashbury Automotive, ABG, this has been rather sloppily breaking down from its own support. Here's the first one I'm actually in, Autodesk, ADSK, and we have been making this whole series of successive breaks on this one, and I'll just add a new level here just to indicate how low we've gotten so far. But these are rather, kind of surprisingly evenly spaced from one another. So you can see just kind of this steady level by level breakdown. I'm also in this one, I can never pronounce this, Albemarle, ALB. And this one, I wish I'd been a little more patient on because the prices definitely got better. The gap here is the key, 235.71. As long as we stay beneath that level, at or beneath that level, this is fine. But you can see just how far away we are from main support down here. Align Technologies, ALGN. I would have been in this one, but the options stink so badly that even I won't touch them. But it's a very pretty pattern, ALGN. This is the third one I'm in, Ally Financial, ALLY. Got this beautiful right triangle pattern, a little sloppy here and there. It's nice when things are like very pure and within the confines of a pattern, but there have been a few violations on this one, but it's still very nice. AMC, I included in here only because I think the WSB boys are crazy And I think ultimately this stock will just become a wreck. I don't trade AMC or GME. I just like to watch them, sort of voyeuristic perversion in the WSB crowd. But I think that its value is just silly. AMD, this is the fourth one I'm in. This is the one Kramer was so crazy about this week. I want in, well, buy it, dummy. But his enthusiasm for it just affirmed my own enthusiasm for my puts. And 9923 would be a nice break on this one ultimately. But this had a nice repulsion away from its long-term broken trend line. And I think, in all these cases, in this market, 42 is actually kind of reasonable. But yeah, richly valued. I'm in this one too. Affiliated Managers, AMG. You can see here, just this has a propensity to top out and up quite nicely. And this is the most recent one. AutoNation, AN. This one's broken down beneath now this is a pretty good head and shoulders right here. Left shoulder, big head, right shoulder, which is lower than the left, and then a failure at the neckline. So that's pretty nice, but it's kind of small. I'm in this one as well. Abercrombie & Fitch, ANF. And this one didn't quite fill its gap. Strictly speaking, the gap is up here, but I've made this more conservative now that we've got some safety here, so I've dragged that line down some. And the last one from this chunk is Bank of America, which is also one I'm in. So out of these 12, I'm in half of them. And we zoom in here, and you can see that this is my best attempt at a resistance, and we've repelled away from that, and we've got a nice series of major lower highs going on. All right, folks, that's the end for this dozen.